Hey everyone, Chris Haddon, Jason Balin here with the Private Lenders Podcast. As always, sponsored by our lending company, hardmoneybankers.com, and our mastermind group for private lenders and aspiring private lenders, hardmoneymastermind.com. Today we are talking about the importance of building those long-term relationships with your capital investors. Like, these should be decades long, solid relationships with people that you really get to know well over time. And it's a very high trust sort of relationship, and it should be. Like, we've been doing this for a long time now, the 13 plus years of lending private money. And at the very beginning, we went right into capital raising mode because we had to be. And many of those people are still around today. I'd say the majority of them, right? Like, maybe a couple people have fallen off over the years. Maybe it just wasn't the best fit on occasion. But with a lot of people, we've put a lot of time and effort into maintaining those relationships over the years. And we're going to go through a few different stories about how we do that, what those relationships look like, and the good stuff it leads to.
Sure, exactly. And, you know, it's interesting because I was talking to a buddy of ours yesterday, coincidentally, and it was kind of similar to this particular topic. And this is what I mean by that. You almost always should be capital raising, right? You never know exactly when you're going to need additional capital or what type of capital you're going to need. Or when you're starting off, it's easy, right? It's common sense. Like, you have a loan, you need capital for it. So you have to raise and raise and raise and raise and raise and raise. And the beauty of this business in general is it's just a full-on investment vehicle for your own capital, right? Most people don't have that ability. But by kind of treating it as every day you wake up, you go out, you try to raise some more capital, and you continue to have capital, even if you don't utilize it, right? You know, we haven't really needed to raise capital in years. Because it's been the same investors over and over and over and over and over. And we're looking for solid deal flow, but you know, we still have access to additional capital if we need to. Most people aren't in that position. Most people need capital over and over and over. And it's important to just make sure you're always capital raising, always capital raising. And you know what? Let's say you're fully funded and you don't need any more capital. Well, guess what? Something can happen. A relationship might fall out, for unknown reasons, and then you need more capital. So you don't want that to hinder your business. So I don't think it's kind of emphasized much. It's interesting. It's kind of like marketing in general. So many people will market and then they'll have like a full pipeline. They're like, oh, I don't need any market. I got plenty of business right now. Well, things change. So it's important to kind of on a regular basis keep doing those proactive steps to make sure you're raising capital over and over and over and over, and you have access to it, and you have good, real relationships.
Yeah, for sure. Yeah, at the beginning, there's a lot of heavy lifting involved. Then, if you play your cards right over time, it starts to snowball on its own using systems. So I remember some of the stuff at the beginning. Like, there was a lot of presentations, like one-on-one type stuff, either in person or just looking at a PowerPoint presentation talking about here's what our business looks like, the loans. Kind of return you're going to get, here's why they make sense and they're safe and that whole thing. And then, so there's a lot of that one-on-one and over the phone. And we also did a couple small group things. I remember one presentation we did early on, and we didn't push the strategy too much, but I remember we did one where we had like a happy hour and like learn about our sort of thing. We had at a restaurant. We had probably 10 or 12 people there. We ended up with 1 or 2 of them actively jumping in with us. This is very early on. So that is one option. And then the follow-up is huge. When we do consulting with people who are growing their hard money lending businesses, I always push the follow-up. So after that meeting, you may or may not have deals at this point. After that meeting, staying in front of people in different ways, such as email broadcasts, is a very effective way of them seeing you and that you're active and that you have deals and that other people are funding them. And that's going to entice people over time. You keep dripping on them. It's going to entice people to want to get in the game as well. And then as you go down the line, some of the automated things that are happening with your system, such as we have a very good loan servicing software called the Mortgage Office. And one of the awesome things it does is that every week we send out interest payments, whatever it's come in from that week. It could be a monthly payment, could be from a closing, payoff, what have you. And it goes out every Wednesday, and there is a report that hits their email inbox saying, hey, you got paid for these 5 loans or whatever it may be, itemized and totaled up, pinging them every week. We're paying you, we're paying you, we're paying you. And I mean, just think about what that does psychologically. Over time, people are like, can I put in more? Or, hey, can I refer a friend? And sometimes you might have access or capability to deploy more money. Sometimes you might not, but the thing keeps snowballing. It keeps going. And at the same time, we've always put effort into those one-on-one relationships, and you're better friends with some of your investors than others, and that's fine. It's just life. But we've had routine things that we've done year in and year out. With one group of guys, we do a couple things with them every year. One, we go down to one of their houses, got a boat on the water, or a house on the water with a boat in Annapolis, and we have a boat day. We go out, we get lunch, we do some wakeboarding, drink some beers. It's a great time. And you really get to know each other with that stuff. And then we would also do a happy hour around the holidays with that same group for several years in a row. Another one of our larger capital investors who's been around since the beginning, we make a point of a few times a year, we drive up to Philly where he's based. We go out to a nice dinner, drink some wine, eat a steak, just, maybe we'll talk some business, maybe not. We're just hanging out with friends. And he's much older. He's our grandfather's age, much older guy that we've developed a close relationship with. I'll visit him if I go down the shore, the Jersey Shore in the summertime. I'll stop by his house, hang out for an afternoon, stuff like that. And we've just done this year in and year out. It's just been part of our routine. So a decade later, or whatever it's been, you end up being like real close with these people. You end up being real friends. They trust you. They trust your deals. And something relevant to now is like we've done a couple side deals where we've raised equity for a friend's commercial real estate acquisitions. We did a multifamily earlier this year. Now we're looking at doing an office equity for an office acquisition, and the numbers look really good. And at this point in time, after so many good deals and good faith and year in and year out, our people have a lot of faith in our recommendations. They know that we don't throw any crap at them. They know that, we put in funds to anything that we would recommend to them, right? And so they trust us and they're willing to jump in. And so we can use those relationships and that capital for additional opportunities, which is huge. Sure,
exactly. I think so many people think about raising capital, or even on the other side, working with their borrowers and originating loans. It's just a transaction. It's just a transactional deal. And it's a lot more than just a transactional deal. It's a relationship. It's got to be a win-win on both sides. We talk about, we've done plenty of videos and podcasts and everything related to different ways of raising capital and how we do it and things like that. But regardless, typically we lend out at 13%, and the capital investor gets about a 10% return on their funds. And, I've talked to so many people over the years and they're like, well, that's high. Why don't you give them 7% or 8% or 9%? You can make more money. Maybe we could make more money. But you really got to think of this past the transaction. It's got to be a win-win for both sides. It's relationship based. That's where it is. Can anybody go out, raise some money, do some deals, make some money, and be fine? Yeah, sure. But if you're into this for the long play, and you got to be. If you want to be into this for the long term, you got to be doing the right things, to the right people. And just because you got to overlook the transaction or treat it more than just a transaction, and you also got to look at it as, there's been deals that have gone sideways over the years, and we make a decision as a company. Hey, does the investor take the hit, or do you know what? Maybe we just stroke the check to the investor, make them whole, and move on to the next deal because that's the right thing to do. So it's a relationship. You got to think about it. And it's interesting. I was actually having a conversation with somebody else related to raising capital on a deal. And I was like, you got to look at it on both ways. I've been on the side, and Chris has been on the side of raising capital. And we've also been on the side of deploying our own capital into deals. And it's got to be a win-win for both parties. And if it is not a win-win, it's going to be a disaster. It just is. Either way, right? If we think about it, if we're lending money to a borrower, if we lend money to a borrower and we completely just, they're desperate, let's just say, and they're willing to take whatever it is, and we just take total advantage of them and charge them ridiculous amounts of money and make it so the project just economically doesn't work, they're going to do whatever they can to just F us and walk away from the thing if they can, right? But on the other side, if you're deploying money, if you're raising capital, you kind of want to make it fair and make it a win-win as well. So it's just, I hope we can get in everyone's head that it's more than a transaction. It's relationships. It's long-term relationships, doing good by people, doing the right thing by people. And it's a win-win, right? We help our investors deploy money at high interest rates of return. And in essence, we're able to get capital for investors that we can, invest in our deals. So if you kind of can see both sides of it, if you see both sides of it, you'll be better off. But make sure you're always out there kind of raising that capital. It's important, and they're partnerships in the good and the bad, right? Everyone's winning when the deals go your way. But as soon as those chips turn and a deal goes sideways here and there, you're going to know very, very quickly if that was the right capital investor to take on to begin with.
Yeah, it's a good point. Yeah, I definitely want to emphasize that looking beyond the transaction to the relationship as a whole is a long-term thing. And the other point I'd like to make in terms of raising capital in general, which I feel like I mention this a lot, and that's because it comes up frequently with people in the mastermind group, that you have to treat it as a job. It is part of your job. It's part of your day, part of your week. Like it's not going to go away. And it's not something that you do a couple times and you're like, oh, I have all the money I need and everything's great. Like this is just not the way investor relations works. And I do get comments sometimes from people in the mastermind group. They're like, hey, I followed the step-by-step, because we do in the stuff that we teach have a step-by-step process for how to present to, follow up with, and end up closing capital investors. And I find that sometimes people will oftentimes say, oh yeah, I followed the process, it didn't work. Mind you, if you follow the process step by step, it has a very, very high percentage chance of working. A lot of us know that. But what is more common is that people don't put in the reps. They do it, they do a presentation to an investor like once or twice. And then if they don't find themselves rolling in millions of dollars in capital, they say, oh, it didn't work. This is just like any other job, just like originating loans, just like whatever your business may be, selling real estate, doing mortgage loans, what have you. It happens every day. Raising capital happens every day in some form or another. And then when you do it consistently, you'll see that it starts rolling in and it starts expanding, and then you get your systems and everything in place, like I mentioned before. But it's not the kind of thing that you do and then it's done, right?
Yeah.
So people do make that mistake, unfortunately. That's why I want to emphasize that point again, is that something happens all the time. I'm still doing it to this day in some form or another every week, right? And it gets way easier. There's no doubt about that. It's much harder lifting at the beginning, but it's still happening. That job of investor relations is always happening.
Yeah, and it takes time at the beginning, and it's kind of a, like you said, it's an ongoing project. Two quick tips. First, what we've realized is, when you're raising capital for these types of deals, it's easier to raise capital when you're somewhat aligned with them and you're lending it to a third party than them lending the money to you. And in general, I was talking to a buddy of mine about this the other day who's trying to raise some capital, and in general, we're going to raise money on an opportunity, and it's like, hey, listen, investor, this is a good opportunity. The borrowers are going to do this. It's going to do, the return is going to be this. This is how the deal's set up. I've always felt like it's a very easy thing to do, raise capital for hard money loans, to invest, and deploy to other people, because you're not the borrower. Like, you're not selling yourself to them as like, I'm going to do a great job. It's going to be like this. I'm not really even emotionally attached. This is a good opportunity. We're going to lend money to the borrower. They're going to pay us an interest rate of return. So I wouldn't be shy to go after that. And, we talked about that. We probably talk about this on every video. If you want to go raise capital, go find good deals. It's that simple. We're not going to go on and on about that, but that is the most important thing. Have good deals.
True.
And whatever you think is a good deal, make it a better deal because everyone thinks they have good deals. I'm talking good deals. A borrower comes to you, you find a deal where a borrower is buying it for, $200,000 and needs $50,000 in work, and you're able to do a loan of like 160, and the borrower is bringing $110,000 to the table or something like that. Like, you want to start raising capital, go find some really good deals like that. They don't all have to be like that, but go find some home run deals, some really home run deals for good borrowers. Investors will follow very, very quickly, because the biggest challenge that capital investors have is deploying their money. It is hard. When you have a lot of money, it is hard to find outlets and vehicles to deploy your money in. So
it's hard to find good deals.
They're out there. That's right.
Yeah.
That's right.
Yeah. I mean, as long as you have good deals to put in front of people that they can't say no to, and they trust you, then you're good. That's pretty much it. If you check those two boxes, then you are going to raise capital very effectively, hopefully long-term. And like we were saying, create those good relationships over time that will help your business and sustain it and make it grow slowly over many, many years. That's the goal here. And that is what we teach in the mastermind. So thanks for checking out the podcast. If you want to learn some more about what we do, then check out hardmoneymastermind.com. And if you want to look at our own lending company and how we present all of that, go to hardmoneybankers.com. And thanks for checking out the podcast. Stay tuned for the next one.
I got to see